So good morning, everyone that's here. I know some more will pop in later, but we have a guest here, so we're going to respect her time. So I want you to introduce you to Deanna, my friend, my TSP sister, who is called the Tax Boss Lady. And you're on, Deanna.
Okay, hello everyone, welcome. Um, so I am here to talk about making and managing money in your business. And I'm also here to share my story from $10 to a multiple six-figure tax business. I can share my slides, right, Linda?
Absolutely, yeah,
But I have
yeah.
a
Let
slide
me
deck,
let me
okay.
let me make sure I've given you
Okay.
access. Well, if I can get my fingers to act like fingers
Okay,
instead of
I see it.
there you go.
Okay. All right, so today we're going to talk about what every financially savvy business owner should know. My name is Deanna Grant. I want to say, let's get started. Let's get started. I'm so happy to be here this morning. Okay, so my name's Deanna Grant, aka Tax Boss Lady. That is where you can find me on Instagram. But I am the owner of Grant's Financial Services, which is a tax and advisory firm. We service startups, politicians, and most professional service-based businesses. My mission in our company is to empower and educate women, entrepreneurs, and people of color to get to their first million in revenue so they can make a difference in their lives, their businesses, family generational wealth, and their communities.
Well,
And who am I? I'm the owner of a multiple six-figure tax business. I'm a business financial coach, a speaker on topics of tax, cash flow, wealth building, and financial literacy. I used to do like there's something called CHA. It's like public housing here in Chicago, and I do like financial literacy seminars for the underserved community. I also help 6 to 7 figure business owners save an average of 10 to 20K in their businesses. So as your business starts making money, I got a strategy for you. I work exclusively with small business owners for the last 20 years, and I've prepared over 10,000 tax returns because I've been doing this work for over 20 years, but I've had my own practice for 10 years. So today we're going to talk about how I started my business, different business entities that you can choose, the 5 mistakes business owners make with their finances, books and tax records, and why you should hire an accountant. Okay, so this is me. I'm going to tell my story. How did I get started? So this is me in front of my office. That's me like financial power, and that's me and my daughter. So how I got started, I apologize. How I got started in my business was I have 3 things happen to me. I got a divorce, my father passed away, and then I got fired from my job. And all 3 of those things happened within the same month. This was like October of 2009, and I'll never forget it. So first, I was married to my daughter's father, and our relationship was not going well. So he had left the house. Then I think about a week later, I got the news my dad passed away. And what about me is that my mother died when I was 12. So when my dad passed away, both of my parents are not here with me any longer. So that was very devastating. Then the next week, my job laid me off. Now, it was right around the real estate crash, but I'm not sure if they laid me off because of the real estate crash or because of the crash in my marriage. Uh, but at the end of the day, that very next month after I got over, after I cried, then I was like, I have nothing else to lose. Every single thing that I have that I thought gave me security, a job, my parents, a husband, was gone. I said, you know what? I'm about to start a business. And that's how I got started. I went to Vistaprint at the time, got a business card, printed that business card out, and then I started like telling everyone I do taxes. And my inspiration and my why was my beautiful daughter because I had to feed her. I had to feed her. And the thing is, I left corporate because I had she was young at the time. And at accounting firms, they want you to work like 90-hour minimums. And I could not be a single mother and work that long. So I decided to start my own business. And that's where the journey began. I started with 10 tax returns. I started at my dining room table. And then each year we did more and more taxes. And in the meantime, I took a bridge job to bridge the gap between the money my business was making and um, money I need to bring in for my household. But eventually I was able to get my own office, and now I have a team of 8. So today I want to talk about business entity, because as an entrepreneur, you just should understand these business entities, and there are levels to this. But first, when you first get started, you could simply just get started, and you could be a sole proprietor. There's no paperwork needed. All you need is your social security number and your business vision, and go ahead and make some money. The next formation that you could go ahead and it's called incorporating is an LLC. Then after that, I feel like your business, a tax strategy, is becoming an S corp. If there's 2 or more people, you'd be a partnership. And then there's also a corporation. There's levels to this, and each entity structure is a strategy, a tax strategy, where each structure, there's a way where you can make money and save taxes. So when you're first starting off, you may start off as a sole proprietor. Then I always advise every entrepreneur, once you decide to incorporate, my advice would be to start the LLC. Why? The LLC is a disregarded entity. As a disregarded entity, it can take the tax formation of any of the other formations. So what that means is an LLC as a tax status, you can elect to be taxed like a sole proprietor. You can elect to be taxed like a S corp, and you can elect to be taxed as a C corp. It's a choice, but there's strategy. So I say level 1 is the sole proprietorship. Level 2, you should choose single member LLC. That's my opinion and advice. Level 3 is we become an S corp. An S corp is a very significant tax saving strategy. This strategy reduces your taxes tremendously. Then level 4, as you become a multiple 6-figure business owner, we may do a combination of strategies, because you want to work with your tax accountant. It's very important for the simple fact that either 1-hour session, that advice that you get every year, it's a relationship that you should have every year. This can actually save you money, and you may want to do multiple entities, which means I would create an S corp, a C corp, an LLC, and then maybe a not-for-profit, and we would have 3 entities, and we can flow income through the 3 entities to save money, which is a wealth formula. But today we're not going to get into that. I just wanted to let you know there are different levels. And when you go to incorporate, incorporation offers asset protection, and also it allows your business now to have its own social security number. So you kind of birth this baby, you birth the business. And I advise for you the first step to be a single member LLC. I also want to let you guys know, because people do not know, for each entity status, when is the tax return due? This is very important. Sole proprietor is due April 15th. Single member LLC due April 15th. S corp, it's due March 15th. Partnership, March 15th. Corporate return, actually, I'm sorry, I didn't edit that. It's due April 15th. This year it was July 15th. And if you cannot file your taxes on time, please request an extension, especially when you're a business owner. As you start making money and profit in your business, then you may owe taxes. Now, we have strategy. We try to, write off as much as we can, but you probably will owe some taxes with a profitable practice. And you want to at least request an extension, because if not, there are penalties. There are penalties and different things at the IRS. But today, that's my girl Beyonce. Let's talk about making and managing money and the 5 mistakes that I see a lot of business owners make. Mistake number one, not having a financial plan. So I know I ask a lot of I actually work with a lot of women. I ask my ladies, I do a call called Pick My Brain Session. It's like a little consult. And I also do something called Know Your Numbers. And this is kind of my give back service, because if someone cannot afford to be on our books every month, because we do work with businesses monthly, then I'm like, please at least come get some advice. But the first question I ask my ladies, I'll be like, so do you know what your profits were last year? And then it's like a deer in headlights, like, I don't know. And there's just no plan. They have no financial plan. So they don't know, like, with their services, with what they sell, how much money do they want to make in their business? So having a financial plan is important. Mistake number two, not having enough cash flow. Sometimes if you're just starting and your business doesn't have any money, you have to go get the money. You may have to go get the money. Either that means loan, that could mean, there's an organization, I'm not sure if it's available in where you guys are, but there's an organization, I think it's a national organization called Axion. And then there's also Women's Business Development Center. Axion is Accion. And then there are different women business development centers. And these places allow you to get very small loans, like a 10K loan to start your business, because sometimes you have to have cash to buy the product. You may have to have an inventory of your product. So you need to have enough cash. You may have to Uber on the weekends, but you have to invest in your business. And if your business is not making enough money, you may have to go get the money. Mistake number three, not having a financial management system. No QuickBooks, no spreadsheet, no journal book, no piece of paper, nothing to track their financial numbers. Just going in their business and not even keeping up with the income and the expenses on a monthly basis. No accountability. Now you guys, what's great about you is you have accountability, so this is cool. But some people don't have any, other business owners to keep them accountable to their goals. So that's also a mistake. And mistake number five, not paying enough taxes or not paying any taxes. A lot of entrepreneurs, I call it the little entrepreneur that cried wolf. So what they do is that in their business at tax time, they write their whole strategy is, I want to write off everything. So they want all of these expenses. And what happens is then you have a loss in your business. Now, what PPP taught me in this whole COVID-19 situation is that business owners need proper planned paperwork. You must have the proper paperwork for your business. Sometimes you cannot ask your friends that may not be as sophisticated in business as you are for advice, because they may not know. But long story short, for COVID, if you need to get that PPP loan, which was the Paycheck Protection Loan, if you had utilized the strategy of writing off everything, and I called it the little entrepreneur that cried wolf, because on your tax return, your income was $10,000 and your expenses were $15,000. So you had a loss of $5,000. And for some reason, I know we don't like paying taxes. So we have that strategy too. Oh, I need to have a loss every year. But as you're trying to grow, and also as you're growing your money mindset should be on profitability, not on expenses, not on my strategy is to have the most expenses and to always lose in my business. That's not how you want to think about your business and the money in the business. So when you're in business, yes, you have to pay a little bit of taxes, but there's strategy to minimize it. But you want to focus on being a profitable business and actually putting the money to the side. Now, I wanted to just talk about this mistake just a little bit. I don't have a slide for it, but I actually have a 3 bank account system that I suggest to entrepreneurs. It's mirrored after this book called Profit First. So it's just to organize your finances. There's 3 things that I suggest that you do. I suggest that you have at least 3 bank accounts. It's a 3 bank account system. So what you'll have is 1 checking and 2 savings in the business. And what happens is as you're making profit every month, this is where you can start. 10%, just so that you're in the habit of saving money for taxes, because I see entrepreneurs all the time, they wait to the end of the year, they actually have a great year, and here you go, you made 6K in your business, and now you got to pay your taxes. And your taxes could be $15,000 and you've saved no money. So what I think you should do is, our tax system is actually pay as you go. That's why when you have that W-2, they take those taxes out on the 15th and the 30th. You get taxes taken out of that payroll check on the 15th and the 30th. Well, you kind of want to have a similar system. So say in your business this month you gross 10K in this month, you should take 1,000, you should take 10% and put it to that tax savings account. And I actually suggest you should take 10% and put it to an account called your profit account. Those three bank accounts, you got a tax account, a profit account, tax account, profit account, and your operating account. And why? And so unapologetically, you just want to get in the habit of allowing your money to flow and paying yourself. So the profit account is so that is a one way where you can pay yourself or ensure that your business at least has 10% profit. So if you made $10,000 in a month, you take 10%, $1,000, you transfer it to your tax account. You take 10%, $1,000, transfer it to your profit account. Now you got $8,000 in the business. Well, why is that good? Because now you need to operate your business and budget within the $8,000. It allows you to not spend every dime. You should not run your business by your business bank account. You should run your business by the numbers. Okay, so this is what I want you to talk about: business financials. What you do not know, you cannot grow. You must pay attention to your finances. So if you do not know your business profits on a monthly basis, how do you know if you're headed in the right direction? If you do not know your monthly business expenses, how do you know what money you can spend on contractors and staff? And if you do not know your business financial numbers, meaning your income and expenses, how can you evaluate future plans and make business decisions? That's why these business decisions, like, they stifle us or make us feel very uncomfortable. And we're sometimes confused because we don't really know what's going on financially in our business. But guess what? The money is the heart of the business. So it's just important that you know what's going on in your business. And I guarantee you, I've seen this time and time again. When my clients pay attention to their finances, they get increase. Their business increase. It's like a law. It's like a law, an unnatural law of business. When you pay attention to your finances, then they just grow automatically. And I promise you, they will grow. And you also now can make intelligent decisions in your business. So the IRS, so it's very important to keep good books and records, and those are like financial records. You do not want your business record keeping system to look like this. Now, a lot of beginner businesses, I will say at least they kept the receipt. Because to me, that's a plus. Because for every receipt you don't keep, and here was an example of my client. This is how clients give me documents, which is not good. And right now we're encouraging a computerized system. And then this other guy, he was an organizer, so he organized his receipts by the month. But you just want to keep your receipts. You want to make sure you keep your receipts. So in your business, there are some things that you need to know. And this is all about the financial statement. This is like a tip and rule of thumb. You must track, measure, decide, to control, because you want to control those numbers. You don't want your financial numbers controlling you. So first you must track them. What does track means? Track on a simplistic basis means take a piece of paper, go get a special journal, a financial journal book, and write down all your income. Or, I don't know if you're using Shopify or if you're using Square, but find a way to write your income down for the month, and then find a way to write down your expenses. Of course, I prefer you use an electronic system, but if you don't have that, then at least keep track of your income and expenses. You can use a spreadsheet or a journal book, but we prefer a computerized system. So every month you should write down your income, your total expenses, and your net profit. And you actually should have a relationship with your financial numbers. Every month you should have a business date night with yourself, a business financial night. So you don't have to have wine, but you can have lemonade. So you get some lemonade and look at those numbers once a month. Get you a glass of lemonade, simply lemonade, or whatever you want, and make sure you have the income, your expenses, and then see what your profits are. But that is tracking. Once you track, now you can measure. So measurement means, oh my God, I have a positive $1,000. Okay, nope, I have a negative $100. That's a measurement. The measurement is the number. Okay, hey, my sales went up from, you flip the page. My sales went up from August to September. That's measurement. You're measuring the numbers. Once you have measurement, okay, my business gross income went up from August to September. Well, what happened? What happened in September that was different than August? Those are decisions. Now I can make decisions. I see that I had increase. Oh, I see that Facebook ad that I posted. Okay, it went viral or etc. Okay, okay, you know what? I want those same good sales in October. I'm going to utilize that same strategy. I'm going to make a decision to utilize that same marketing strategy I used that gave me a profitable month. But if I had not tracked, I could not measure, I would not be able to make decisions. And when you make decisions, you're now controlling your numbers. You're the boss of your business. Because whatever you don't know, you can't control. When you're like, I don't know, like, how much money did I make last month? I don't know. What were your expenses? I don't know. That's just not a strategy of a business boss and a business leader. You must be the CEO and financial leader of your business. All right. But also, the IRS, actually, it's a rule in the IRS code that if you're in business, even if it's a sole proprietor business, you must keep good books and records. And I don't know if any of you guys got any of that. It's called the Economic Injury Disaster Loan. I don't know if any of you got some of that SBA money. And then they were giving out like 30K loans, 100K loans, 150K loans. If you got any of that money, then definitely on that contract, it said you must keep good books and records. I actually kind of celebrated for a moment. I was like, what? You're making business owners keep good books and records? But it's just important because if you get audited in your business, then all of those expenses that you reported on your tax return, the IRS can deny them. And if they deny them, you're going to pay for that. You're actually going to pay taxes by not being a great financial leader. So, but good books and records help you monitor the progress of your business. They help you prepare your financial statements. They help you just identify the sources of your receipts. And like I said, make decisions. Because you may, once you have good records, you may see that vendor number A, oh my God, I'm spending how much money with vendor A? They charge me, I'm spending $10,000 in 3 months with vendor A. Here we go with making decisions. I need to use that as leverage. Now I can go to another vendor because I know my number. No, hey, vendor B, I spent over 10K. Can you cut me a deal? And the answer probably would be yes, but then you actually are making decisions instead of just keep overspending or paying a vendor more than you need to, because that's a strategy too. Good books and records help you prepare your tax return. That tax return time can be a stress. It's like, oh my God, I got to get all this stuff together. Well, maybe you should, if you keep it together once a month, like do that fun financial date night. Actually tonight I'm taking myself to dinner and I have a financial date night with myself tonight. So I do it too. Good records can increase the likelihood of business success. So we want to talk about some software systems because I told you could have a piece of paper, and that to me is just so you can have something. But there are some softwares out here that could help you to track your expenses and your income. Now there's something called Expensify, And Expensify is pretty cool, but it's an expense only module. And you get your little cell phone, and every time you spend money, you take the receipt, you download the app, you scan the receipt, then you upload it to Expensify, and it after some time, after like a month or two, it starts categorizing it for you. But that to me is like just at least to capture the expenses, especially if you have a lot of paper receipts. But I know a lot of stuff's electronic in these days and age, in this day and age. Um, QuickBooks Online is my software of choice. There is something called QuickBooks Self-Employed. It's about $7 a month, and if you don't have anything, you could at least start there. But a business that plans on having multiple six figures, I want you to go ahead and invest in the full version of the software, which is Intuit QuickBooks Online. So there's QuickBooks Self-Employed, and at least QuickBooks Self-Employed, you have something. It's better than a pen and paper. It's better than Excel spreadsheet, and you only have 10 categories to choose from. It's very easy to use, and just so that you have something, then go ahead and do QuickBooks Self-Employed. But I feel like if you know your why, you know you're headed towards that six-figure business, then you should go ahead and invest into it. QuickBooks, you can do the essential service, which is the lowest price point, but you'll have something. And then there's a software called Zero. If you're like an e-commerce business, Zero actually captures data very well. So that is a software. I actually work with a lot of professional service businesses, so I prefer QuickBooks, but Zero is very good for those e-com businesses. And then there's something called FreshBooks. FreshBooks, I love FreshBooks for consultants. If you're like a consultant or coach, because FreshBooks has this fabulous invoicing system where you send your invoice to your customer, and then you can look in there and you can see, did they open it? It's like, did they even open my email? Like, aha, you didn't pay me yet. You didn't even open that invoice. No, no, no. So FreshBooks is kind of cool, and FreshBooks is pretty easy to use, but my software of choice is Intuit QuickBooks Online. Um, I wanted to tell you, like, when you don't keep your receipts, because even if you have an electronic system, you actually still need to keep your receipts. Why? Because our IRS is still in the 19th century. They're still in the 19th century, and there are certain vendors that kind of cross the line. So, for example, there's Walmart, right? So say you go to Walmart and you bought paper, pens, and ink for your printer. Those are all legitimate business expenses. Now, if you get audited by the IRS, we're going to knock on wood, but for God forbid you do. Now, when the auditor sees Walmart, we all know Walmart, we could buy pajamas, we could buy food we can buy food, not for business expense food, but just food for our family. We could buy pajamas. We could buy, I don't know, house shoes. We can buy stuff that is not a business expense. So that is why it's important to keep that receipt, because the receipt will then tell you, oh, okay, this was a legitimate business expense. But when clients don't keep those receipts, it costs them. So for every receipt you don't have, if you're in a 30% tax bracket, and receipts add up, because people are not like properly managing their business financially or keeping track of those receipts. $1,000 of receipts will cost you $300 in taxes. So now, because you didn't keep the receipt, you're going to pay more in taxes. And the same thing will happen if the IRS audits you and you don't have that supporting documentation. They'll actually they're going to add back that expense, and it's going to cost you interest, penalty, plus the tax that you would have had to pay on it. So you just want to make sure that you are being a good steward and being very disciplined financially with your business. I know you can't see this that well, but here was like a little love note from the IRS from one of my clients that didn't do right. The IRS audited this person, and they disallowed the car and truck deduction because they didn't have like a mileage log, or they didn't have a mileage log. So if you use mileage on your business, which is a very great business expense, I find that using the mileage versus the actual expenses is actually a better tax deduction. But you must keep a mileage log. So either you go ahead and you can go to Excel right now and download a mileage log, or there's an app called Mileage IQ, or QuickBooks Self-Employed actually has a mileage tracker in it. But the credit card and bank account statements are unacceptable. So what happened is when the person got audited, they actually didn't have the receipts. So for the audit, they submitted their they submitted bank statements and credit card statements. And the IRS unfortunately wants receipts, invoices, and billing. They want you to keep those receipts. And so those were those changes. Now, for receipt capture purposes, an easy system, this is what I'm going to suggest. Every time you have a receipt, like if it's electronic, then you either have one email account that all your receipts go to, or when you have that receipt, maybe get a folder in your email system. And every time you, because a lot of these receipts are electronic, like our Zoom receipts, Calendly receipts, Shopify, everything usually is pretty electronic. What you do is whenever that electronic invoice comes, you have one folder and you archive them to the folder. For our manual receipts, when you leave the store, you take your cell phone, take a picture of it, and then either in your Google, it's not Google Cloud, but it's like in your Google Drive or your iCloud, which is a cloud-based storage, you create a folder called receipts. Within that folder, you should have January through December. And then every time you go to the store, you take a photo of the receipt, then you upload it to that folder for the month. So you always have it, because even though we have QuickBooks, like I said, in an audit, the IRS wants receipts. So it's just a way to keep your receipts, because you could keep them in like expanding file, which is one of those things you get from like Amazon or Office Depot or Staples. Because I don't even know what stores are still around right now, because businesses are closing, unfortunately. But you could do it manually, which that's okay. It's just that after time, those receipts start to rub off. So then I suggest, and then who wants all that paper? But if worst case scenario, keep the paper. I don't, anytime, like instead of having, I don't want to say an excuse, but instead of not doing anything, do something. So either you use your cell phone, take a picture of all the receipts, upload it to a folder, get one of those expanding file folders that you can find on Amazon, and then you archive those receipts by the month or by the category. By the category means you would have categories for a file section for supplies, a file section for auto expenses, a file section for office supplies, a file section for meals, a file section for marketing expenses, and you would have a separate section in this expanding file folder for all your receipts. And this way, this also gets you ready for tax time. However, we did discuss an electronic financial statement capture system such as QuickBooks Online, QuickBooks Self-Employed, Xero, FreshBooks, or Expensify. So accounting is the language of business. You are in business to make money, and profits are everything. That's just my charge for the day. Accounting actually is the language of business, because we're in business to make money, and understanding the finances is kind of the heart of the business, and profits are everything. Please, that there's a little like, there is a little, I don't know what you call it again, but there's a little, it's not a fact. It's a myth. There's a little myth about, I'm in my first year of business and I have 3 to 5 years to have a loss. Now, people say that all the time. Sometimes it actually does take a business owner. It could take you 2 to 3 years. And if it does, keep going. But at the end of the day, that does not have to be your truth or your story. I know a business, they started up in their first year. Their first year, they made like 30K. Their second year, they made $500,000. Their third year, they were at 3 million. So it is possible in this day and age to make money in your business. You do not have to accept the loss story. And then you should hire a good accountant. Like I said, accounting is the language of business. Financial information helps you to make informed decisions. All successful businesses have an accounting department. So just think of Walmart, Target, even Macy's. There's no big major business that does not have a successful accounting department. In fact, they have all types of departments. They got an accounting department, they got a legal department, they got an HR department, they have a accounting, legal, HR, marketing. They have separate departments in their business unit that govern those sections of the business, because all of those are equally important. But definitely the accounting department is extremely important because that's keeping track of that money. So also a good accountant can help you with tax planning, tax savings, tax strategy, and appropriate write-offs. Now, I can be found on Facebook at Tax Boss Lady, on Instagram at Tax Boss Lady. I'm trying to do on Mondays, I'm doing like a Monday Money Matters, and just trying to do more financial education to entrepreneurs. If you text 312-265-2977, I'll send you a free like 12-month cash flow template if you like, if you would like. I also want to tell you that I do have something called Pick My Brain, a Pick My Brain strategy session, which it's $97. But if you had any more questions about anything I talked about, it's a way for you to get your questions answered. I also have a session called Know Your Numbers, Know Your Financial Numbers. And in that session, we'll do a deep dive into your business. And if you're unclear about how much money you want to make in your business and what that looks like, I definitely can help you with that, because I like talking about numbers and I like talking about money. I'm done. I don't Lindy, you have to tell me what's next. And thank you guys
Okay.
so much for
So
listening
so
and having
thank
me
you,
today.
thank you. I mean, all of those tips are good, and at least I want the business owners to understand that even if you do the Google Drive thing, like how hard is that? Take a picture of it, upload it to a Google Drive. Like that's free. That's free
Yeah, that's
information there.
free.
So you can do that on your own. But I love that you use the profits first for the
Yes.
three accounts. Yeah, because that's smart. Like you all are getting nuggets that people are paying big money to get. Um, and I love the whole your five step strategy is I know for a fact is good, but also that you have to pick your brain session. So if
Yeah, to
any
pick
of
your
you are
brain
not
session.
following her, then please follow her. So I want you to speak to. I have a group of three sisters that are operating a what could be a very successful sewing business. And so she asked the question, what about the best way for three members? It's a three member partnership. So can you speak to that about partnership? Like what's the first thing, if you were to give them advice on the first thing they should be doing, what should they be doing?
Okay, so I shared my story at the beginning because there's love and then there's divorce. And I know people are sisters and family, and actually I actually witnessed a business divorce. And not to go to the negative first, but the first thing I would say is have a very clear operating agreement. So I would actually go to the lawyer and have a very clear operating agreement so that if somebody decides they do not want to be in the business any longer, that they can there's on paper documented how you can successfully exit this and what do you get. Because when you start making a whole lot of money, you kind of want to talk about it now. You want to talk about it now because life happens. That's one thing. The third thing, so I think they should definitely incorporate via LLC, and they would be taxed as a partnership. And they just have to get very clear on how the partnership works. Like, is it 30-30-30? Is it, what are the splits? Because in a partnership, someone can have 10%, someone can have 70%, someone can have 20%. It doesn't have to be equal if it's not equal. But I just think that they should have an operating agreement and have it on paper.
Okay. And that's my advice too, because anytime, I always tell them, if you won't marry them, don't be a partner to them. Right.
Right.
because a
If you
partnership is,
won't marry him, don't be his partner.
yeah, because
Yeah.
people that are shady in their personal lives tend to be shady in their business lives and vice
Yeah.
versa. And then also because if they're not marriage material, like they don't like, some people don't like commitment.
Right.
And so
Yeah.
your partner needs to understand that you like commitment. Like there's a commitment to the process. So I
Yeah.
tell all my clients, if you can't marry them, please don't partner with them, because I've
Yeah.
heard
Yeah.
horror stories. I heard the horror stories.
Yeah.
But yeah, but in all of this, whether you are a partner or whether you're a single person doing a solopreneur or whatever you all guys, whatever you're doing, this is the backbone of how you stay in business. Like if the money is not right, if the dollars and cents don't make sense, then your chances of being in business on the long term is going to be no, right? So
Yeah.
that's what you all need to understand about business. Like all my business owners on here, you're in business to make money. Like that's a given, but you have
Yeah.
to know what's going on with the money, because every business plan I've ever written, you have to have a cash flow statement. You have to
Yeah.
have a profit and loss statement. You must have a balance sheet. Those are three givens with every business plan, whether you're trying to get investors or you're trying to get capital or you're trying to bring on a partnership. Those three things count. And so this
Yeah.
right here is the essence. Like you guys, I can't even overstate how much this session right here should mean to you in
Yeah.
your business.
And I have there's a couple of not horror stories, but it's always when the business owner is trying to grow, meaning here comes, for whatever reason, you're doing well, here comes that investor, and now you're not ready. You're scrambling. And you could miss your opportunity because the investor, when they want to put money in your business, before they invest, they kind of want to see what's going on. And a red flag is when you don't got a financial, when you can't, when they ask for a financial statement and you can't give it to them within 1 to 2 days. That's a problem because they know you don't have it. So
Yeah,
when they know you don't, when they know you're not taking, when you're not taking care of your business finances by at least tracking it, no one asks, and I'm pretty sure, depending on the business, it didn't have to be that sophisticated. So, like I said, instead of overthinking, at least do something. Do
hmm,
something. But I just think that you should have a budget and a line item for accounting matters, period. Just
absolutely.
period. Yeah.
That, yeah, that, I mean, that's the essence of everything, right?
Yeah.
Because
Yeah.
if you don't have, I mean, this is the lifeblood of your business. I don't care what you're selling. This is definitely the lifeblood of your business. If your numbers aren't right, if you don't even understand your numbers, then the chances are you're going to have issues. So I have
Yeah.
two questions here. One was, should in a partnership situation, should the split be based on equity bringing in as far as materials and machines and such?
Uh, so in partnership, you could actually split. You can. That's actually, there's a gift in LLCs, and that's why it's a disregarded entity, because you're kind of free to structure it however you want. So you could structure your deal where there can be different there can be different percentages for profits, meaning you can do a 10-20-70 split on profits. For capital, you could do a 10-20-70, or you could do 30-30-30. So from profits and capital, you actually can have separate percentages. You do not have to keep the same percentage for everything. So what that means is, if you have someone and they're bringing more equity into the business and it should be valued higher, then they should get a bigger percentage of the capital. So you can have a capital split. So you can split that capital, however, if it's 50, if it's three people, if it's 50, 20, 30, whatever is appropriate, or you could do it based off of the what you're actually giving to the partnership. So if someone's giving equipment and that's worth 50K, if someone's giving cash and that's worth 10K, if someone's giving time and that's worth 20K, because there could be one of those partners that, like, hey, I'm not going to work. I'm going to give my, I think it's called human capital. I'm going to give my human capital. And that's worth 30K a year, because if I was at a job, that's what I would get paid, 30K. Then you can allocate the percentages based off of that contribution. I
That's
hope
good
I
stuff.
answered that
Yeah,
question.
you did. Thank you.
Okay.
Thank you. The other is so Lynn says good morning. She said you spoke on
Morning.
business loans. What does that process look like? And is it based off of the personal score, credit score?
Oh, okay, okay. Yeah, typically when you're first starting, most of those loan opportunities, except for during COVID, COVID was awesome because people were allowed to get loans with no paperwork. Not, I don't mean no paperwork, but you had to have your tax paperwork, but you were able to get a loan, and it wasn't specifically based off a personal credit score. But of course, money matters. So if your credit score is not strong, I would start doing something right now to try to work on it to become stronger, because most opportunities require you to be a personal guarantor at first
Mm,
until you actually establish business credit. There
mm,
is an organization called nav.com, NAVE.com, where you can start to establish business credit. And of course, you can get like smaller trade lines, like maybe an Office Depot card, a Staples card, to start establishing business credit. But those two organizations that I told you about, which is Axion, ACCION, there's another organization, and I know this is national, LISC, LISC, LISC. These are all community and economic development type organizations. There's Women's Business Development Center, LISC, Axion, ACCION. Those organizations understand newer entrepreneurs, and they typically give funding based off of need and less credit score based, meaning they have a lower credit score. There's a lower credit score requirement. There's also a strategy. This is not a long-term strategy, but this is a strategy to get funding. There is also like I call it the secondary market companies, which would be like PayPal, Cabbage. There's a company called Blue Vine, PayPal, Cabbage. There's another company called Lendio. Now because of COVID, and they're all doing the PPP money, they're not they're not really giving a lot of loans, because I think it's high risk. But if you have like a product or something, or have like a merchant service, you if you have a Square account, you can get a loan off based off your activity. And that loan usually is based off the activity, has nothing to do with credit score. So it's based off of transactions. And like if you have a Square account, PayPal account, you typically can get a loan based off of your transactions. The only issue is it's a high interest rate loan, but it's a temporary strategy, because sometimes, especially when you have a product, you have to get more product, you have to get more inventory, and you got to find a way to get the money.
mm-hmm.
You got to find a way to get the money, and that's a strategy. But this is also what I suggest. If you still have a W-2 job right now, this actually is the better time to get the loan while you still got the W-2 job. The Women's Business Development Center will actually give you money just because you have a W-2 job, versus you full-time entrepreneur. Not that you can't get it as an entrepreneur, but when you got that W-2 job, they use that as leverage, because they're like, okay, at least with this W-2 job, you could pay the money back.
Yeah, yeah, yeah. That's good stuff. That is real good stuff. So, um, again, you gave some. So, Lisk actually has a grant out.
Oh yeah, they have a grant
Yeah,
out.
they have a
Yeah,
grant
yeah,
out, and so
yeah.
I'm teaching them about applying for grants and how to apply for grants. But this financial thing is so important. Here in Chattanooga, we have the TVA Credit Union, which
Okay.
has an it's called an Idea Leap, and they start out the bottom of the floor of those loans is 25,000, but it
Okay.
goes up to several hundred thousand, and it's because it's underwritten by other agencies here. So I'm actually bringing him on into the group on the 21st to talk about that.
Okay,
Um,
that's awesome.
yeah, and Danielle, where are you?
I'm here in Nashville.
Yeah, okay, so she's in Nashville. So yeah, so I think TVA is in Nashville as well. Yeah, because I know they're in Knoxville, but I think they're in Nashville as well too, Danielle. But it's a TVA. Yeah, do y'all have TVA in Nashville?
Oh.
You don't? Hmm.
Mm-mm. When I moved from Chattanooga to Nashville, I had to cancel my account because they didn't have one here.
Did okay. But there are, but like I said, LISC I know has a national
Yeah,
grant
national.
that they're giving, and
Okay.
then the SBA. I require all of them to go by the SBA and connect themselves because they have free resources for business. Period.
Yeah.
And I'm considered one of their business partners. So they actually refer clients to me. So yeah, so I have a
Oh, that's
very good
awesome.
relationship. Lynn, thanks you for your comments. Anybody else have comment or questions before we allow her to go? Thank you, Deanna, for coming. Like Saturday morning, we know Saturday mornings are hard. It takes a little bit more
Oh, yeah.
effort. It takes a little bit more
I'm like,
effort
let
on
me
some.
get my coffee, and
Yeah, Saturday mornings are woo.
I don't want to look so tired on here.
But we do appreciate you guys, and please connect with her. You see her information, take a screenshot of it so that you can get it for later if you need to. But we thank you, and thank you for your time. We cannot repay you for coming and sharing this wisdom with us. We're going to use it, and then we're going to report back to you how successful we are. So,
Okay,
right,
that's
and remember
awesome.
the tax. And what they need to know about the tax boss lady is this is not just for um, Tennessee. I mean, it's just not just for Chicago,
Oh
because
yeah.
you can do taxes all throughout the United States.
I do all 50 states because guess what? The federal is the same everywhere.
Yeah,
And then I do all 50 states. Well, actually, the only states I don't like are California, unfortunately, and New York because they have too many state laws.
yeah,
They just got way too many
yeah.
that you need to be subject matter expert. But I do taxes in all 50 states. I am the boss of a business tax return, and any questions you have, you guys can reach out to me because I would love to help you however I
Absolutely,
can. And thank you
absolutely.
so much, Linda, for having me.
Oh
Thank
no,
you so much. I
thank you.
appreciate it.
We are appreciated. So have a great Saturday, and
Okay, you guys too.
we're gonna finish on our wins and get back into the books, guys.
Okay.
But thank you,
Bye
thank
bye.
you.